Hi, my name is Kwesi Opoku. I'm a tax manager here at Zeifmans LLP. I'm both a CPA here in Canada and a CPA in the state of Illinois. This is my colleague, Kobi. A mensch. Why don't you introduce yourself?
Thank you, Kwesi. I'm Kobi. I'm also a U.S. and Canadian CPA. I'm the senior U.S. tax manager at Zeifmans, and together we handle a lot of the cross-border tax issues that arise for the various teams and the various partners that we have here. A question that often comes up: I get a call from someone in the U.S. and they'll ask me, "I have some dealings going on in Canada. Can you tell me, do I have to file a Canadian tax return?" And, it depends on the circumstance, really, but maybe, Kwesi, you can tell us a little bit about it.
Yeah, so there are a few different circumstances where a non-resident would be required to file a Canadian tax return. The one that comes up most commonly is when they own taxable Canadian property. Taxable Canadian property includes real estate or resource assets, etc. Another example is when they generate business income here in Canada and have a permanent establishment. Of course, if they earn employment income here in Canada, they would also need to file a Canadian tax return. Another one that comes up, although less frequently, is if they've been in Canada physically for more than 183 days. Under those circumstances, the Income Tax Act treats them as a deemed tax resident, and then they're required to file a Canadian tax return like every other Canadian tax resident.
Yeah, we have something similar in the United States, where something called the substantial presence test, where if you're in the United States for a certain number of days over a 3-year period, then also you're deemed to be a U.S. resident. However, there are forms we can file with the United States, depending on your circumstance, that would allow you to be deemed not as a resident. Instead, the one form that comes to mind is the closer connection statement. Or if you're required to file a tax return, sometimes a person's been in the United States so many days that they need to file a return, they can take a tax treaty possession saying that I'm actually resident of Canada and the United States, but I have closer ties with Canada, and therefore, based on the tax treaty, I'm a resident of Canada and a non-resident of the United States.
Now, I know in our practice, the most common reason why somebody needs to file a Canadian tax return who's not a resident is because they own Canadian real estate here in Canada. I'm pretty sure that also in your practice, one of the reasons why they have to file is because they own U.S. Real estate property and they're a non-resident. Can you talk a little bit about some of the tax considerations a non-resident would have to take into account if they purchase U.S. property?
Certainly, yes. That's a big part of our practice, is filing non-resident tax returns for Canadians who own U.S. real estate property. It's very important to get some professional advice if you're looking to get into this kind of investment, because there's a lot of things that people don't realize. First and foremost, one of the first things you should be doing after purchasing your real estate property and finding someone to rent it is they need to give that person a Form W-8 ECI. This form tells the renter that they don't need to withhold 30% and remit it to the IRS, 30% of the gross. That's the default tax treatment of a non-resident owning U.S. real estate property. So that form basically tells the renter that you're going to be treating your rental property as a business. This will allow you to do two things. One, get the full amount of rent from the renter directly. And two, it enables you to take deductions, because the ordinary tax treatment is you can't take deductions against your rental property, which leads me to my second point. It's very important that this gets done in year one, is you make an election with your tax return telling the IRS, I'm designating this rental property as something called ECI, effectively connected income. Basically, I'm treating it as a business, and that enables me to take deductions. Such deductions as depreciation, which is a big one, property taxes, mortgage interest, and the like. Most of the time, honestly, we see people with rental properties reporting a loss because of all the deductions they're entitled to, especially the depreciation. That's a big one.
It's funny, in Canada, we have a similar concept. So the default in Canada is for your tenant to withhold 25% of the gross rental income and remit that to the CRA. It's funny that tenants are responsible for that withholding because the vast majority of them don't even know that that's their responsibility. But if you file an election called an NR6, you are actually allowed to withhold 25% on the net. So that means before you come up with the remittance amount, you're allowed to deduct from your gross income the mortgage interest, the property taxes, maintenance expenses, et cetera, and then on that net amount, you calculate the 25%. At the end of the year, you file a tax return under Section 216 of the Income Tax Act. And in that tax return, you report again your gross revenues, your expenses, and then on the net income, your taxed at graduated rates. Usually, for most taxpayers, it's a little bit less than 25% withholding, so you get a small income tax refund.
Kwesi, a question that often comes up. Canadians want to invest in U.S. real estate property through a U.S. corporation. Can you tell me a little bit about the implications of that?
That's a very complicated area of Canadian tax. In Canada, we have this concept called Foreign Accrual Property Income, where if you own a foreign corporation and it's a controlled foreign corporation, the income that you generate in the other jurisdiction is then attributed back to you, the entity that owns the corporation. Like I said, it's a very, very complicated area of Canadian tax. It's something that you most likely want to speak to a Canadian tax expert about before you go ahead and make the decision to go and invest in another country. It's the part where you say, like somebody like you.
Like someone like you. Or someone like Zeifmans.